Welcome back to the Silver Money Masterclass series, a program aimed at helping you navigate the ever-evolving world of money and how you can find ways to preserve your wealth. In our last episode, we went over the history of money, its origins and attributes, as well as the introduction of fractional reserve banking. We also covered the events that led to money becoming completely unbacked by anything other than faith and the debt of an economy. If you need a refresher, please be sure to follow the links before and catch up. In today's episode, we'll be exploring what it means to have intrinsic value and how the uncontrolled printing of fiat money is impacting the global economy. Rising debt, wealth disparity, inequality, inflation, geopolitical uncertainty. These are but a few buzzwords you have probably heard recently, topics that are discussed more so now than ever before. But why? Is the global economy really so fragile? What are the underlying factors causing all of this disturbance? And if there is the potential for economic turmoil, how do you protect your wealth? Well, to start, you're going to want to take more control over your personal finances and understand the various considerations when diversifying your wealth. One major consideration to bear in mind is, does the asset that you are putting your money into maintain its purchasing power? But what is purchasing power anyways? Put simply, purchasing power is the amount of goods and services you can purchase with one unit of currency. It fluctuates, meaning that the number of goods and services you purchase can either increase or decrease depending on the value. Now, if prices move higher, you are unable to buy as much, thus losing purchasing power, and vice versa. And that's where inflation comes in. See, inflation is a measure of the rate at which the average price level of goods and services increases over a period of time. When inflation rises and price levels rise, your purchasing power decreases. Another way to look at it is your wealth decreases in value because you can no longer buy the same amount of things with the same amount of money. So what causes inflation? Well, the answer is actually surprisingly simple. It's the printing of unbacked money. Because the supply for most modern economies is essentially infinite and unbacked, the fiat money has no inherent value, and the more of it there is, the less valuable it becomes. And as a result, the printing of money has been devastating. So when you actually take a look at the evidence, it becomes clear that cash maybe isn't the king that everyone makes it out to be. So to find ways to maintain your purchasing power, we need to look at stores of value that help you hedge against this inflation. Luckily for you, there are two assets that have held their own since the beginning of time: gold and silver. Now, gold and silver have been around for millennia and have been considered money for about as long. As we have discussed in our last episode, these metals have maintained their status for centuries, up until about the 1970s when the US decided to get off the gold standard. The government essentially stopped backing each US dollar with gold, and thus the dollar became a fiat currency, backed only by the belief of those who held it and the debt of the US economy. Now, fiat currencies really are the most common form of currency today, but do they really function as a store of value the same way gold and silver have done historically? Well, it turns out the US dollar has actually lost 96% of its purchasing power since 1913. This means that now a dollar can only buy 4 cents compared to what it could then. Meanwhile, assets like gold and silver have retained their purchasing power. This means that the value of what 1 ounce of gold or silver could buy you back in 1913 is essentially the same, if not greater, as what it is today. Gold and silver are great stores of value because their shelf lives are essentially perpetual. And unlike paper currency, they can never become worthless. Their price may go up and down, but they always retain a residual value. So beyond the concept of silver and gold as money, you may not actually realize that silver is actually contained in almost all modern electronics, from cell phones to solar panels, and so on, making silver one of the largest commodities in the world, if not the second largest. Now, throughout history, gold has been viewed as a safe bet because it maintains your purchasing power in two particular scenarios: financial crises and war or geopolitical uncertainty. To really hammer the point home, let's look at a recent example, the 2008 global financial crisis. This was a time when stock markets crashed and central bankers responded by printing more fiat currency. To make this more digestible for people, the Federal Reserve called it quantitative easing. In essence, though, these efforts simply diluted the value of the dollar. During quantitative easing, the US central bank alone pumped trillions of dollars into the economy, adding a massive amount of national debt. Now, because central bankers were printing more fiat money and the supply increased, the value of each currency note decreased. So your $1 bill bought less than it once could. And what happened to gold and silver during this time? Well, in response to the recession, both metals skyrocketed to all-time highs. Gold prices climbed to $1,920 an ounce, and silver jumped to just under $50 an ounce, which is wild. As fiat currencies decreased in value, people rushed to hoard precious metals because they needed to find a way to protect their wealth. And what better way to do that than with assets that have actually proven themselves time and time again to be strong hedges against inflation and economic turmoil. We've spoken to many analysts here on the show over the past few years, and surprise, surprise, most of them have been correct in their assessment that we are now in the biggest depression since the Great Depression of the 1930s. And it's not just the analysts or myself either. We're also seeing more and more high-profile experts telling investors to diversify their portfolios into gold, into silver, and most recently into blockchain and cryptocurrencies. Now is your time to search for real value and take the steps to build a smarter wealth to secure your future. The first step is to look for security and stability, attributes that come with stable currencies. Now, some fiat currencies like the US dollar, the Japanese yen, Swiss franc, and others are considered stable currencies because the economies backing them are also viewed as relatively stable. However, because there is no intrinsic value and no hard assets actually backing any of these currencies, when inflation or hyperinflation occurs, these currencies come under attack. Real assets like gold and silver do not, and that is why it's important to protect yourself with hard, tangible assets that have been proven to be long-term stores of value, ones that have been around since the first days of money and have always maintained that intrinsic value. Money has evolved over time, with fiat currencies now taking the center stage for the global economy, but these currencies are supported by nothing more than their corresponding nation's debt, and by hope that people will continue to believe in their perceived value. That doesn't seem very promising, especially if you take a look back on some fiat currencies that have actually collapsed. It's actually quite surprising, and it's not unique throughout modern history or longer history. Throughout history, there have been many cases of fiat currencies which have dropped their intrinsic value to zero. You'll remember in our last episode, we spoke about the ancient Chinese creating the first instance of paper money. Well, it turns out that due to a lack of checks and balances in the amount placed into circulation, it ended up becoming one of the first currencies to collapse and one of the first victims of hyperinflation, which is happening in a great deal of countries around the world today. So you might feel like your wealth is secure, but as the nation's debt ceiling continues to increase, people should start asking themselves where they can find stores of value. As we mentioned in the last video, in the aftermath of the 2008 financial crisis, cryptocurrencies were born, a new digital asset driven by technology and not by governments. The most popular, of course, being Bitcoin, has proven to be a store of value since 2009, but given that it is backed by nothing except the technology and the faith people put into it, it's essentially a blockchain-enabled means of transferring value. In other words, it's subject to extreme volatility and is difficult for people to rely on for trade and commerce. It's time to connect the secure attributes of assets like gold and silver with modern technology like blockchain to create a whole new form of money, one that is stable and safeguards your wealth, and one that is entirely designed to benefit those who hold it. And with that in mind, join us next week when we uncover emerging technologies and the return of asset-backed currencies that are shifting society's views on money and its true purpose for economies of the future. With that in mind, join us next time as we uncover emerging technologies and the return of asset-backed currencies that are shifting society's views on money and its true purpose in the global economy of the future.